Hey guys, how's it going? Value Venture Investing here today. So today we're going to be talking about Apple. Going to do a quick video on their Q1 2025 earnings. Quick look at the stock here. Been doing pretty good as of late. We took a little bit of a dip recently before we were nearing around 260. But of course, there's quite a bit of geopolitical stuff going on. And the stock has been doing pretty good since earnings late last week here. So I'm going to go through those today quickly, give you some insight on these earnings and on the conference call. So Q1 2025 earnings. Revenue, we saw an all-time revenue record. So I was actually a little bit surprised, $124.3 billion. The expectation was 124.1, so green here. This was a beat. I still remember the first time we hit around $100 billion in a quarter. That's a crazy amount of revenue. Almost 125. We'll be there soon. $125 billion in revenue. So 124.3 to be exact this quarter. EPS is up $2.40 a share versus the estimate of $2.35. That was a beat. However, the amount of shares they're buying back, that never surprised me that we see beats there. Cash position, $141.36 billion. Dropped from last quarter, but of course, as we know, they're looking to go net cash neutral. In terms of iPhone, this is something that's kind of drugged down the stock a little bit. I'll make this a little bit bigger for you guys. A little bit of a disappointment, $69.14 billion versus estimates of $71 billion, so a slight miss there, but we'll talk a little bit more about that. Mac revenue, again, like I said in my last video, these new upgrades with the silicon they're doing, the M4 family especially, being pretty amazing, almost $9 billion, $8.98 billion. The estimate was 7.96, so that was a nice beat. Nice beat with iPad, over $8 billion versus an estimate of 7.32. Wearables, home and accessories, a little bit of weakness, but pretty close, 11.75 billion versus 11.95 billion. And services revenue, again, like I've said many times here lately, it's crazy the growth of this and how they still manage to beat expectations every time. 26.34 billion versus 26.1 billion, so another beat there. And what I find so amazing about services, this is now essentially $100 billion. I believe in the last 4 quarters they're about $100 billion in revenue just in their services division alone. I mean, you look at a company like Tesla, maybe Tesla's got a lot more growth. But Tesla in 2024, we were only looking at just under $100 billion in revenue for the entire company. And now I'm taking a pretty long position in Tesla. I've been buying it for quite some time now. But still, it just shows you the magnitude and how important. And we're seeing about 75% gross margin in the services revenue. And that's why we're going to get into how their earnings were actually a bit stronger than expected here. Got this slightly zoomed in here. So here we go. 2024, we're looking 3 months ended, year-over-year basis here. Products, 97.9 billion versus 96.4. So we actually saw slight growth in products, but services where we saw a lot of growth. 26.3 billion versus 23.1 billion. So the total net sales came out to 124 billion. Versus 119, so about 4% growth just in the total revenue of the company. Not a huge amount of growth, but again, we're seeing these large numbers, growth nonetheless. Of course, the gross margin was significantly more as well, $58 billion versus $54.8 billion a year ago. And of course, that's because while revenue itself, total revenue may not be growing a ton, say 4% or so, gross margin is actually increasing at a faster clip. And that's because if you look at the cost of sales here, like I said before, services, 6.5 billion of that 26, we're looking at about 75% gross margin, and that's way higher than their products gross margin. So as that mix maybe tends to shift a bit, you're going to see more profitability, and that's what we saw. Of course, research and development, $8.2 billion for the quarter. Nice to see increase on that. So we'll run down to the bottom line. We saw $36.3 billion in net income versus $33.91 billion, and that's that difference I'm talking about. That was over a 7% increase when revenue only increased 4%. So that's how you're seeing more money go into the bottom line. Earnings per share, of course, basic was $2.41 versus $2.19 a year ago. Now, when we're looking at net sales by reportable segment here, it was actually up in every geographical region. So this is really great news too, except for Greater China. Americas, we saw it up, over $2 billion. Europe, roughly $3-ish billion. Greater China is when we saw that weakness again. We've been seeing this for quite some time. It's 20.8 billion a year ago, now it's 18.5 billion. But Japan, significant increase. The rest of Asia Pacific was a slight increase, and that's how we got that total net sales. In terms of by category, again, this was the top line number you might have saw in the news. It was like kind of bad news, and like I said, I don't think we need to focus so much on iPhone revenue anymore. 69.7 billion a year ago versus 69.1. So we saw a slight decrease in revenue for the iPhone, but of course the Mac is blown out of the water. 7.7 billion versus 8.9 billion this year. iPad as well has been doing great. I remember a time when iPad wasn't doing so great, about $1 billion up there. Wearables, home, and accessories. Again, like we said, there was a little bit of weakness, dropped from 11.9 billion to 11.7, but not a lot. And of course, the huge amount of growth in services, 26.3 billion versus 23.1 billion a year ago. And we're going to get a little bit more into that in a little bit here. I'm not going to get too much into any of this. In fact, I'm not going to get into much as well. But this is their statement of cash flows. Just look at how much repurchase of common stock they're doing. 23.6 billion versus 20 billion a year ago. So they're even increasing that. And if you look at elsewhere on the financial statements, you can see the reduction in share accounts. Now, in terms of the conference call, we're going to go through this pretty quickly. Top line, it was an all-time revenue record. And of course, this quarter is always their strong quarter, but it's great to see that even in these tough times, we saw an all-time revenue record. As well, not surprisingly, we saw an all-time services record. And this was up 14% year over year. So we might be seeing total revenues, under 4%, but services are growing at like 14% year over year. And like I said, the margins are about 75%. It was up 100 basis points from last year. They're always talking about their active install base. But again, this has increased yet again. So $2.35 billion, not billion dollars, but billion installed active bases. And that's where you're going to see that services really start to shine. If you can increase that installed base, that's where you're going to want to look at that number. iPhone revenue is roughly flat year over year. We looked at that. It was actually slightly down. Not surprisingly here, the iPhone is selling better in markets with Apple Intelligence available. So that's something to keep in mind. So we saw a little bit of weakness, of course, in the iPhones, but this launch of Apple Intelligence has been slow and a bit cumbersome, to say the least. I don't think it went as well as any of us really thought. They got a lot of work to do there. So when they kind of get the kinks out of that, I do expect to see a little bit of an acceleration in the iPhone growth. Only one question on DeepSeek. Unless you've been living under a rock, you probably know about this, but I guess it's not something that necessarily affects Apple too much. But we saw a little bit of strength in Apple stock recently when we saw some of the pullbacks in NVIDIA. Some of these other companies, even Microsoft, took a pretty big hit there. And the main story with DeepSeek is the efficiency, right? It's the assumption, and we don't know for certain that they're using NVIDIA chips, older NVIDIA chips, right? So they're talking about efficiency and the ability to do this amount of compute without so much money, without so much capital-intensive GPUs, right? So that's what kind of brought Apple into the forefront and saying, well, Apple's just kind of like the king of integration of their silicon and their software. So there's a question that was talked about that asked about that rather, and just he kind of gave a generic. Tim Cook kind of just gave a generic response. They have a tight integration of their silicon and software as a plus, and they talked about on device quite a bit. So yeah, I mean it's great for Apple, but that story is still relatively new, but it could be a positive for Apple going forward. In terms of their guidance, the strengthening U.S. dollar means foreign exchange is going to become a headwind. So we're going to see about 25% or 2.5% reduction there. However, even given that next quarter, total revenue is supposed to grow in the low to mid single digits year over year, and services is going to grow low double digits year over year as well. So pretty solid growth, but not massive amount of growth. Of course, this video, I'm just, as of recording this video, this is right after all the US tariffs essentially have come into play here with Canada, with Mexico, with China. Of course, you do 25% Canada, 25% of Mexico, 10% China, with a little carve out for 10% on oil and gas in Canada. So I'm expecting some volatility. It's going to be tomorrow as of recording this video. So that's going to be interesting going forward. I'm obviously not going to get into that too much. But if you're watching this, if you're watching this after, we're going to see, I think, a little bit of volatility for a while. But just wanted to do a quick video update on Apple. Don't forget to like and subscribe, guys, and I'll see you in the next one.